What if I told you that your story could change someone's life? Would you share it? Emerging Beyond.
Thank you for tuning in to another episode of Emerging Beyond. Welcome. Thank you for joining us today. I am your host, Asir, and today we are going to be doing a segment that I like to call Get Your Money Right. So, in this world that we live in, of course, we've all heard the saying that money can't buy you happiness. However, the things that you buy with your money can buy you happiness. And my guest here today with us is Miss Gloria Smith and Mr. Marvin Smith. Yes, they are married. No, I don't think they have issues like the Smiths and that would be with Angelina Jolie and Brad Pitt. Or do you guys?
No.
Y'all not in house throwing stuff, are you? So what we are going to do is we're going to start this first segment. They will be returning guests here because a part of emerging beyond any situation is, of course, knowing how to handle your finances. And so we're going to go to a quick commercial break. And when we come back out of that break, we're going to start with the basics, and that's understanding your credit and how it impacts you.
Hello, my name is Marvin Smith with DKR Group, and we're here today to talk about one of the biggest myths of credit. When you file bankruptcy, that all the negative items are deleted from your credit, and that is so not true. What happens when you file bankruptcy, all those items remain there on your credit, and even when you get discharged, those items are not removed.
Beyond. As I stated before, this segment is called Get Your Money Right. So we are going to talk about credit and understanding what credit is and how it impacts you. But first, I want to know a little bit about you, Ms. Gloria Smith.
Well, my name is Gloria Smith, and I'm married to the wonderful Marvin Smith. And we have several businesses together. We have a credit where we help people analyze, look at their credit, help you understand your credit, because there's just so much that we just don't know when we're talking about credit. You know, credit, I mean, I can go on and on and on, and I talk to clients every single day, just helping them understanding the basic of, you know, credit and how can they improve their credit and what things the banks are looking at when they're going to the bank to finance a car or a house. It's just simple things that we just don't understand.
That's probably because it's so vast. Even me as a consumer, you know, when you get bombarded at the Target or somewhere, and they're like 10% off if you apply for this card, and you're standing there like, how is this going to impact my credit, or if I'm going to get approved or not approved? And I'm sure that is what most consumers think when they're sitting there. No diss to Target, I love Target. That's why I said Target, not Target. When you're sitting there at the register, and of course, you don't know if you want them to pull your credit or not because you don't really have an accurate understanding of what they're looking for and how it impacts you. So all of what you just said, your businesses is under the umbrella of DKR Financial Group, correct?
Yes, yes.
Okay, and Mr. Smith, what is your background?
My background actually is in construction and real estate, and it
somehow.
Hold on. Construction and real estate.
Yeah.
And what's your background?
My background is the restaurant business.
Wait a minute. Now let's see how they emerge into finance and getting credit repair from restaurant and construction.
Yeah.
So you guys have to tell us that story first.
Okay, so for the last 12 years, I've been a restaurant owner. I came from corporate America, decided that I wanted to, just brand myself, just try to have a legacy for my family, So I left corporate America and went on to open a restaurant. I started off with a franchise, DKR Crickets. And from there, I decided to brand myself and open a cafe social house. And then from there, now we have the cafe social house, a brand new location that's getting ready to open.
What is it? What is the cafe social house? A coffee?
It's not coffee. I like the cafe because it's going to give you an intimate setting. It's going to be more like a cafe intermezzo, like real quaint, sexy. You want to do a little work there. You can come in, bring your laptop. You can come get a nice meal. Just enjoy yourself, family oriented, as well as, just stop by, pull out that laptop and go to work.
I don't know if you got what she said, but she was working for someone else. Now she's working for herself,
Yes.
number one. And number two, investment, Mr. Smith.
Yeah, with myself, I started out in construction. I was a stucco applicator for years. And
What's stucco? The little on
kind of
the
like
wall?
the Taco Bell, outside the Taco Bell.
Oh,
Yeah,
okay.
Yeah, those type, the rough Mexican looking textures.
Uh-huh.
And I did that for years till like in my 30s. And then I gradually ascended to real estate. I became a general contractor in 3 different states. And when the investment thing came on the scene with real estate, I started buying and selling houses. And I bought and sold some commercial buildings. And then, of course, the crash happened, which affected me severely. And that's how I ended up in the credit business.
So you saw a lot of people losing their homes.
Yes.
Yes,
Yes.
I do remember that happening, around late 2000?
Yeah.
Yeah, in the
Yeah.
late 2000s.
Anywhere from 08
Well,
to-
late 1990s to the early
Right,
2000s.
yes.
Right. And predatory lending.
Yes.
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 And for those of you that don't know what predatory lending is, people who really shouldn't have qualified for a home were getting homes.
Right.
And then they could not keep those homes.
Right.
So you came into play because you saw a lot of the people losing their homes.
Yes. And also businesses, investment properties, just about anything financial, everyone was losing. And it seemed like it severely affected their credit. And I always knew a little bit about credit, but what happened as the market got worse and worse, people would come to me and ask my advice on their credit because they saw how we would do certain things. And long story short, it turned into a full-fledged business.
Right.
Did you meet at the restaurant? Did you go to JR Crickets and have some wings?
No,
and
it's
meet at
funny.
the
We
restaurant?
do have a funny story about that. I used to actually go past the first JR Crickets, and we never met. And then when she had the restaurant downtown, that's when we actually met.
Yeah.
You
Yeah.
came in for wings.
No, yeah, came in for a meeting actually.
So
you can
came-
tell them that story.
Yeah. So what happened? What's your version? You know, the man always has his version, and then the woman say, "Well, this is the truth."
Right.
So what's the version?
Well, actually, we met through a mutual friend. We were introduced, and we just became good friends from that point.
Yeah.
We were good friends, and then it just transpired into a great relationship, business and personal.
Yeah.
Like, we became best friends.
Yeah.
So did you have that conversation that said, "Okay, I've seen people and businesses lose their home. I want to
Yeah.
learn more about credit." And then you said, "Well, I've been in the restaurant business." How did that conversation go? Just kind of ad-libbing, but how did that go?
Well, actually, Marvin you know, when he came into the restaurant, he saw a lot of opportunities there for me to grow as a business owner, and he was like, hey, let's talk about this. Let's talk about some things that I can do to help you improve your business, to help you grow your business. And that sparked, you know, of course, that sparked my interest. And I'm like, oh, wow, you know, Marvin, what do you have in mind? So he just came in and totally, I think you should do this, and this will bring you more customers, this will bring you more money. And I'm like, wow, this guy knows a lot. So I was like, okay, so let's try it. And I did all the things that he kind of recommended. We did a little makeover to the restaurant and started bringing in more clients, and it was just really amazing. And from that friendship, you know, we grew. Our kids met each other, and they kind of put us together. You know, the kids, you know, the kids, when they get along really, really well, it just makes that love, you know. I would start looking at him like, ooh, and he started looking at me like, ooh, 'cause the kids were
and he knows how to make me some money.
Yes, yes.
Well, I think that's just amazing. And so now he helped you with the cosmetic aspect of your business. But then when you guys started talking about credit, were there some classes that you took? How did you actually begin to transition into being in a position to help other people now? Now that you've helped each other, how did you transition to helping?
Well, we were a big proponent, before I met Gloria, I was a big proponent of following Robert Kiyosaki. He was the guy that wrote Rich Dad, Poor Dad. And he had a lot of fundamental things about finances and things you should do, and definitely investments. Right. And so from my construction background, real estate background, you know, I knew a lot about real estate investments and things like that. And then now, just recently, we've been certified as credit experts.
Yes.
So we're like credit expert witnesses. So if we had to show up in court for a bank or for a consumer, as a witness, like a forensic credit witness, we could do that as well.
Exactly.
And our relationship just seemed to blossom from a standpoint of, I used to always talk to Gloria about when people start a business, they're normally undercapitalized.
Most
and
definitely.
the biggest reasons why small businesses fail is because they don't have enough capital.
Well, we're going to go into, when we come back from our break, we're going to go into now understanding the aspects of how credit impacts you, because you guys just told that story, and I just want to say to you guys real quick, do you realize that they were already a business by themselves, and then when they came together, they built a bigger business together, because marriage in essence is a business.
Yes.
We'll be right back. Welcome back to Emerging Beyond with Asir. I am having a wonderful time talking to the owners of DKR Financial Resources, Miss Gloria Smith, Mr. Marvin Smith. And just before we came back from the break, we were actually talking about their relationship and how they met. But we're going to go into some factors that affect your credit and understanding what credit is. But before we do that, one of the number one causes of divorce is financial. Have you guys ever had any type of financial disagreements in your home? And if so, how did you resolve that?
Well, actually, we get along pretty well with finances. My husband, he made a rule that when we first got together, he said, look, I want to make the money and just never let anything get cut off. I don't want to see a disconnect notice or anything of the sort. So it has worked out really, really well. With me having a great understanding of finances, Marvin, I'm just going to be honest with you, he has been my mentor because he taught me everything that I know about credit, just understanding a credit report, knowing what to look for, because you know, I was one of those ones that wanted to apply. When you see the little 10% off, and I would say, honey, a couple of times, honey, could you apply for this for me? He was like, no, I'm not doing that. So Marvin has been most definitely a great asset to understanding my credit and my finances as before we were even married. And then when we went into the marriage, it just made that everything flow so well.
So that, because he knew so much, that made it easy for you to trust him.
Yes. He just kind of took the lead and I followed. Like when you speak with someone who's very knowledgeable, as Marvin is, it just becomes, you feel comfortable. His spirit was right, and he came in just giving information that made sense to me. I was like, okay, this gentleman, and I started Googling. I'll go behind him and I'll say, okay, he told me this today. Let me go Google.
You confirming what he said.
Exactly. So I was like, this gentleman really knows what he's talking about. So I just felt so comfortable with him until it was so easy for us to just transition.
Yeah.
And your knowledge, Marvin, came because you owned a business.
Yes, yeah.
And the story is that you owned the business and no one knew that you were the owner. Can you tell us that story?
Yeah. When I first started my first construction business, I was 19 years old. And for the first maybe 4 to 5 years, it was really rough being seen as the boss of the company because I didn't even have a mustache at the time. And, my first lesson was that I got pulled over one time by a policeman. I guess I was speeding, I don't know. And he was like, let me see who's the owner of the car? And I was like, well, it's a company car. And I was like, well, I own the company. He immediately started to write the ticket. So I learned from that point on,
Are you serious?
this is my dad's truck. And then also when I would be on the job sites, on the construction site, they would look to my foremans or the guys that worked for me that were older than me. They would look at them as being the boss of the company.
Did you ever say anything, or did someone on your team say, no, that's not me, that's him?
The first couple of times they would always say, no, you need to talk to him. And then after it happened a couple of times, I was realizing what was going on. And so I told my guys, hey, whoever they walk up to, whoever they think is the boss, just act like the boss. I said, we all know who gives the checks out. But
So when you say what was happening, basically, even though your employees had said you were the boss, it disrupted business.
Yes. Big time. They wondered, how are you this age driving that truck or owning this company, and I'm this age and I'm not doing this. It was kind of like I could see the guys that we were working with wrestling with those thoughts.
Right.
Well, I can see why Gloria chose you, because if you told me that story that you were 19 and you was banking $1 million at 19, I would have been like, okay. I think it's wonderful. Well, one of our viewers asked a question and they wanted to know, since we talked about the market crashing, how did it make you feel as a man in the real estate industry, seeing people lose the homes from underneath them?
Well, it was a weird time. They said we haven't seen a time like that in like 100 years. And I truly believe it, because I saw businesses failing. Was it Bear & Stearns, a 100-year-old company failing? Right. When you saw banks that were just folding overnight and other banks buying them, it was the weirdest time I had ever seen. And we were experiencing in my own company a situation where we couldn't buy and we couldn't sell. And so it got to a point where guys that were actually my mentors that I looked up to, they were losing millions of dollars worth of investments. Right. And long story short, it kind of led me into the credit piece, because I kind of had the perfect storm. I ended up having a divorce in my first marriage. Right. I lost my business, and I lost my bank account as well.
Wow.
It was a horrible time, but I learned a lot of great lessons from it.
And so you had to rebuild.
Yes.
And that's what a lot of people watching this show needs to know right now. How do you rebuild coming from the lowest credit score possible, which is a 300? Or is
it's about a 350.
About a 350?
Yeah.
Mm-hmm. And how do you rebuild from that? So first, let's define what credit is.
Credit, I would say, I like to always call it a basket. It's a basket of your collections or your bad things that have happened in life and your good things that have happened in life. And what happens, credit is a prediction of what you'll do in the future.
Right.
And that's what a credit score is in effect. And people always have these questions about what about inquiries, or what about this, or what about that. And you can't assign a certain amount of points to a certain item. What it is, you have to look at it as a whole.
Well, we're jumping the gun just a little bit because you're still defining what credit is.
Yeah.
And credit is assigned to you by these companies.
3 major bureaus. Yeah. You got Equifax, TransUnion, and Experian, primarily, who are called the big 3,
Right.
who determine if you go to buy a car, or if you go to buy a house, or
Right.
get a credit card. You'll deal with one of those 3 bureaus, or maybe all 3 if you go to buy a home, and they determine
Your credit worthiness.
exactly.
Okay. So these companies, essentially, when you use your social security number
Yes.
to actually go and purchase something,
Yes.
that's when you actually enter into their system.
Yes. Yeah, the first time that you, just like you said, to go from the very beginning, the first time that you fill out an application for any kind of credit. For most of us that's going to college
Right.
and filling out their first credit card, or Macy's or Sears, whatever information that you give them on that application is how you enter the credit bureaus. That's correct.
Okay. And then from there, let's talk about how it starts to impact you from there.
Yeah.
So we know what is the range of your credit score.
Each bureau has a different range, but like you said, to give you some open numbers, it could go from 350. TransUnion may be the highest at about 850. So you go from 350 to 850.
Yeah.
Okay. So we know what the range is now. We know how you actually enter into these 3 credit bureau systems. Let's talk about the dynamics of these 3 credit bureaus. So we have one that pulls from one part of the country, another part of the country, and then a third part. So can you explain what they are?
Okay, that's kind of a myth, I would say now.
Okay.
Yes, it
in the
is.
past, that probably would be a bit more defined, but after the crash, now you have banks or stores that pull 2 bureaus,
Okay.
or even 3, and it doesn't matter where you actually stay.
Yes.
Okay.
They'll try to say that, okay, we live in Atlanta, and they only pull Equifax,
Right.
and that's not true.
I've heard that. I've
Yeah,
heard
that's
that.
not true. Just because they're down the street does not mean that they're the only ones that get to pull your credit bureau.
Yes.
Okay, so anyone can pull from anywhere because they're trying to secure the deal for you.
Yeah, and it's more so, just to go a little bit more in depth on it, it's
Yes.
more so the lender or the store, which bureau they trust,
Exactly.
Okay, to get the higher score?
to get the more accurate information.
Exactly.
Okay,
Yeah,
okay.
for them it's all about information.
Okay, so we know what the score is, we know who the 3 companies are, we're kind of building on this because what we want you to do is we want you to kind of see the bigger picture. And if you can see it in steps, you know how to fix it.
Right.
Yes.
And so it's just like building a home.
Yeah,
You have to
exactly.
start with the foundation in order to actually keep layering those bricks.
Yes.
And once the bricks fall down, you know where to start.
Yeah,
Yes.
to
Okay.
put it back together. Yeah.
All right, so we know that information now. And so when certain companies pull your credit bureau, we talk about points.
Right.
That's where you were going with that. How many points are attached to what? Kind of
Right.
give us
Right.
just a little bit of a idea.
It's kind of what I was saying before. You'd be surprised what actually starts building the points is stuff that has nothing to do with what you think. The biggest part of it is your personal information.
Right.
Having correct personal information will actually starts your credit score. Even though it doesn't assign to any financial value or anything like that, the beginning of it is your personal information.
So your name, your address impacts your credit score.
Name, address, social security number, date of birth.
Right.
And your social security number can tell people exactly where you were born.
Yes. Yes.
Okay.
Yeah.
So,
And then after that, the first thing that may happen when you apply, the very first time, you're gonna have an inquiry. They don't affect you as much as people think. It's this big thing that, oh, inquiry is gonna kill my credit, and that's not it. The biggest thing is the time in the bureau. The other things are the utilization on a credit card, or the amount of times you made on-time payments, and the length of on-time payments.
and all those affect those points
Yes.
that you get?
Yes.
So if you apply for a credit card, how many points does that affect?
You can't give, it's not,
It varies.
yeah, it's not set up like that. It seems like it's set up like
Yeah,
that,
it
but it's
varies.
not. You know, if I could give any good advice about points, make sure you pay everything on time, and also watch what's called your utilization, or you take your credit limit versus what you borrow. And you want to keep that number lower than higher.
Right, 30% is the thumb, the rule of thumb. And then also, your credit is made up of 4 components. You have installment, you have your mortgage section, you also have your revolving section, and you have a other.
And yeah, public record.
And public record.
Okay, so break down each one of those so that they would know when you say installment, if someone doesn't know, but they've seen that on their credit report.
Right.
What does that mean?
Installment is the area where you may have a loan, you get a loan, and you have a set payment. Your car note would be under your installment, a personal loan would be under installment, and then when you go to your revolving is revolving credit that's open, where it's constantly, it can go up and down. So that would be like your major credit cards, your store credit cards. Those are considered in your revolving section, and of course your mortgage is your mortgage.
Yes.
And then you have your public record, which is anything, could be a bankruptcy that shows up there, it can be a tax lien, that would be your public record. And then sometimes you have a section that is other, which would be, you know, any miscellaneous, like if you pay rent on time, you can go to rent reporters and they'll report your rent, and that will go in the other section.
Okay. Okay, so we have the basis. Now let's talk about, when we come back from the break, things that affect your credit in a negative way. Those are the things that you've done that makes that score go down. So we'll be right back.
Hi, my name is Gloria Smith with DKR Group, and I'm here today to talk to you about one of the most common myths regarding credit. Most people feel that once they pay an outstanding collection, that it's automatically removed from their credit report, and that is so far from the truth. Today, I'm here to tell you that it will remain on your credit for 7 full years.
To Emerging Beyond. I am here with my guests, Miss Gloria Smith and Mr. Marvin Smith, and we are talking about getting your credit right. Now, we've broken down what credit is, we've broken down the 3 credit bureaus. Now let's get into the meat and potatoes, and that is, what are some of the things that affect your credit? And the first thing we want to talk about is lack of education. So I'll let either one of you take the wheel on that.
Yeah, like you're saying, lack of education is major. A lot of times there's no class taught in high school, no class taught in college. And so you go out in the world learning about credit, like you said earlier. Do I just fill this application out to save 10%? Or do I treat each inquiry like I want to get a major credit card instead of just getting a 10% off or a discount? So like you said, the miseducation about credit is major, and it's one of the things that ends up hurting you in life. You will go along getting a credit card just to use it for a little while, stop paying it, and then next thing you know, it's a collection and it haunts you for 7 years.
Well, you were 19 and you started your business. You had a business at 19.
Yes.
Did your parents teach you about credit worthiness?
Yes. My mother taught me a lot. And one of the ways that you could even help your child in starting out, because I was still quite young at the time, she added me to her credit card when I was about 16, and that actually started my credit.
Yes.
And my mom made on-time payments all the time, so I started out with like a 700 credit score at 18, 19 years old. So I was very fortunate at the time.
Right.
Even though she did that, because I've done that with my son as well, even though she did that, did she explain to you why she was doing it so that you would know that I'm not just adding
Yes.
you to my credit report to give you a credit score, but this is how it's going to affect you in the long run for the rest of your life?
Yes, yes, she definitely had that talk. She told me to make sure I always pay on time, and she taught me about this one word that I'm sure everybody knows called interest. And she was saying that the quicker you pay things off, the less interest you pay, because what happens, we'll unconsciously dig a hole for ourselves. You know, you'll wait, make the minimum payment, and each month that 20% of whatever the credit cards are charging adds up, and you'll look back in years and you barely made an impact on a credit card that you had for 3 or 4 years.
Right.
So one of the things is education.
Right.
Plain and simple, education is very important. But are there any classes outside of school, outside of the basic economics class? Are there any classes that are available for parents wanting to teach their children? Do you guys offer that?
Yes, yes. We actually offer a free boot camp actually that we're having this weekend coming up, the 24th through the 26th. It's 8 steps to improving your credit score, where we're offering a free class to the public. You can just RSVP on Eventbrite.
And you're welcome to bring your child with you as well.
Oh, definitely.
Most
Yes.
definitely. And we also have a book coming out, upcoming book called The Psychology of Credit, and that's going to teach you and show you like what we're going over, the 8 steps to improving your credit. It also, you know, give you some helpful hints, because so many times it's just lack of knowledge. We just don't know. I didn't know. I was at that point before in my life where I just didn't know. And, you know, my mom taught me some things, but once I met Marvin, we were able to teach our young adults, our girls. We have college students that are in college, and they have 800 credit, well, 750 credit scores already at the age of 16. You know, they had a 750 credit score, which made a difference, and we've taught them and educated them about credit so that they can be successful in society. So that's why Marvin and I do what we do, because we would like to educate people so that they'll know, you know, just knowing helps. It really does.
It really does. The educational aspect of it is very, very important. And I find often that even in the African American community, because it's not passed down for generations to know about your credit worthiness, that no one goes out and seek to know it either. It's just that you have bad credit, and then it passes on to your child, and you hear the old jokes about it being in, oh, my lights are in my mama's name, or something like that, or my mama messed up my credit. But it's all happening because they did not have the knowledge to know that this is not only affecting me, but now my child is 13, 14, and 15, and they have to dispute with the credit bureau that they were underage.
Right. That's true. That's very true. We see that a lot.
You do?
Yeah, we'll see a lot of juniors, sons of fathers, and like you said, people going through rough financial times. You know, they have to do what they have to do, and like you said, we'll see young people with issues with even medical bills. That's a big one. Medical bills get transferred.
Medical bills get transferred?
Well, what I mean by transferred, like you might go to the hospital, you think it's under your insurance, and next thing you know, it's on your credit.
It's on your credit.
Yeah.
How harsh does that impact your credit?
Well, now they're actually passing some new legislation, but to give you a short answer, it impacts a lot. It's like a collection, and a collection drops your credit big time.
Okay.
Yeah.
And the collection are those things that the bill collector is calling you, and you're looking at your phone, and you're like, don't answer.
Right.
But you want to be in a position where you can answer every phone call.
Exactly.
And your class this weekend is going to position you that when they call you, they're just calling you to say you have a credit on your account.
Right.
So tell us more about the class, tell us about the 8 steps.
Well, what we do in the class is just like what you're doing now. We take a person from the basics of just understanding what their credit is, and also if you've had any misfortune or a divorce, a loss of job, some kind of medical operation or something that held you back from paying an obligation. We show you how to first assess what happened, and then, like you said, take the steps to figuring out how to improve it. Actually answering the phone if the collection agency's call. Don't be scared to answer the phone.
Don't be scared.
And actually negotiate. And we like to often say, take your power back. Because some people feel like they've lost so much to their credit, and sometimes they feel like they don't even fit in anymore because of their credit. And you still can fix it and move forward and actually have a great credit score.
Let's talk about some of the things that impact your credit in a negative way. Divorce.
Yes.
Big time, right?
Yeah, we have that a lot when it comes to divorcees thinking that, okay, the divorce decree, it says this. But in reality, once you split up and whoever doesn't pay the other bill, guess what? It goes on both of you guys' credit.
Yeah.
If you both of you guys guaranteed it.
What happens when one of the spouses files bankruptcy? We mentioned bankruptcy earlier. Since it goes on both of their credits, who's responsible?
Yeah, that's one of the things. It's a legal battle almost. You have to go from the bank to actually the trustees of the bankruptcy to figure that out. Divorces get really ugly and they really hurt both parties, usually for a few years.
So we're talking about that. Student loans.
Oh yeah, that's a big one.
That's a big one for us. Student loans is huge for us. We see that every day.
And there are new programs coming out to help people get relief from student loans.
Yes, they are.
But that is a major problem with even the younger generation and the older generation who are very successful. They had a lot of student loans.
So would you, on a scale from 10% to 100%, what would you say is the highest percentage of something that's negative that has impacted someone's credit?
I would always say collections, because when I say collections, a collection could come from a phone bill, it could come from a utility bill, a car, a home. Collections kind of run the gamut of everything involved in credit, because what happens, the original debtor, whoever you borrowed the money or whoever you got the credit card from, sells it to a secondary market called collection agencies. So that really runs the gamut. I say that's 90% of most people's problem are collections.
Or a 30-day late. We tell our clients all the time, a 30-day late is worse than having a bankruptcy on your credit, because that lets the creditors know that something is going on, something's not stable here. So once you hit that 30-day late, that kind of scares the creditor.
Yeah.
And it most definitely impacts your score.
Wow, that's interesting. That's interesting. I did notice, like on the credit report itself, that there is those mile markers, the 30, 60, 90 days.
Right.
Yes.
And so if someone is pulling your credit, they actually can see that you've been 2 times 60 days late.
Yes. Exactly.
Yeah, and speaking of that, what happens, say you have a 30-day late on your credit, it normally affects you for up to 2 years.
Yes.
That long?
That
long.
Wow. So you could get everything straight and you're in the process of trying to buy a house, and someone pulls your credit report and they will see that you were X amount of days late from 2 years prior.
Yes.
And you guys are going to show someone how to repair that so they could get that house years later.
Yes.
Okay.
Correct.
Okay. Well, we are going to take our final break, and we will be right back with the Smiths and getting your credit right.
My favorite chapter in the book is when we talk about credit for our teenagers. We have several teenagers, and just being able to help them have a great credit score before they reach the age of 18. My husband has a saying, this is our lifestyle, so they have to find a way to, obtain their own.
Yeah, talking about that chapter, the part I like is we'll teach the kids how to manage their finances as far as, only borrow what you're able to pay back, how to make the monthly payments, and then even how to set up automatic payments. So in doing that, you prepare your teenagers to be responsible adults.
Mrs. Smith, and we are talking about getting your credit right. And we are going to ask Ms. Smith a question. Why is it so hard for people to save at least $2,000?
Well, actually, the average American, it's hard for them to save the money is because we always, we spend, we live outside of our means. That's just like with the crash back in 2008. We were buying homes that we literally couldn't afford. So sometimes we have clients that come to us all the time. They get credit cards with a high limit. But if you don't keep that credit card under 30%, then you're right back in the same boat. It drops your score tremendously. So it's very important that we just do a better job of, budgeting.
And not living above your means, because
Most definitely.
you hear the American dream is to purchase your own home versus renting.
Right.
When you're in college, they practically throw the credit cards at you.
Yeah.
So it makes it so hard to not accept the credit card when you're living off of ramen noodles.
Right.
Right? So you see this credit card come in the mail and you're like $5,000 limit and you apply for it. Now you're buying for your friends, you're buying to look good in college. On top of the student loans, someone says to the homeowner, like you said, the predatory lending, all you have to do is give me $500 down.
Yeah.
And that was going on at that time.
Yeah.
Give me $500 down and you can live in this big old house over here. And people were doing it.
That's correct.
You know, so like you said, living above your means to appease the Joneses.
Right.
That would be correct.
Right.
So we have to get back to a point where we are educating, but we are also making society as a whole okay in the aspect of living at or just slightly below your means.
And that just goes back to educating our clients. DKR Group, what we try to do is we try to educate our clients and help them understand finances. A lot of times people just, if you never had a big house and you have the opportunity to, someone tells you, hey, why don't you, I can give me $500 and you can live like this, and you've never lived like that before. Yeah, it's exciting. So what we try to do is to teach you how to get there. Take those baby steps. You can get there, but you have to have a plan to get there. So Marvin and I, what we do is we sit down with each one of our clients and we help them understand how important credit is. It makes a difference in your interest rate. When you go buy a car, do you want 22% or would you like a 4.5%? And that would allow you to have that extra money to do the extra things that you would like to do just by, being a good steward of your credit. That way you can go on to, if you want to have that big house, guess what? Your interest rate is going to be very low versus paying a very high interest rate. So that makes a difference.
But a lot of our viewers have no clue of what the interest rate means to them from a positive or a negative standpoint. All they see is, I want this Benz, and he said I can put $1,000 down and get this Benz, and now you're signing a piece of paper with a 25% interest rate. They just know they want the car.
Right.
So explain to them about the interest rate of it.
Well, what we try to do is really talk to people about making planned decisions versus emotional decisions.
Right.
And a lot of times, cars especially are very emotional decisions. And, we've had clients that we'll help, and they went months, maybe even years without a new car. And the moment their score hits 700, they all of a sudden go out and buy a car. And then the first thing I'll ask them is, what kind of rate did you get? And either the answer is usually, I don't know, or if we figure we made a breakthrough with them, they'll know exactly what it is, because it's an incredibly low rate, because they paid attention, they went to the right car lot, or even they did the right process of buying a car instead of just making an emotional decision.
So the definition of the interest rate is the amount of money that is tacked on to your base payment.
Right.
So because we're giving you this loan, so we're going to charge you an additional amount in the form of percentage on the loan that we've actually given you.
Right.
Exactly.
And that's not just with the car, that's with the house or any type of loan.
Mhm.
And that's based off of your credit score, your credit worthiness, actually.
Yes. So, with that being said, I would like you to tell us how often you have these classes.
Well, actually, you can reach out to Marvin and I, DKR Group, financial.com, and you can check our website out. We're on our website. It tells you when is our boot camps. We have a boot camp lately, once a month, and we may be coming to a city near you, so most definitely go to our website and look for our new boot camp, look for boot camps, and they are free, no charge to our clients, so come out, join us.
And tell us the name of the book.
The name of the book is The Psychology of Credit, and you can check Marvin and I out on the website. We have tabs on there that'll tell you a little bit about us, our book, what we do, and if you would like to reach out to us, our number is on there, or you can fill in the information and it'll send us a message, and we will most definitely reach back out to you.
I just have one quick question. What is the percentage rate of failure for most people when it comes to their credit?
Usually, statistically, it's every 10 years a person has a major event in life, whatever that is. That could be loss of job, divorce, medical finances, death in the family. So statistically, it's every 10 years something happens uncontrollably in our life that affects our credit.
And that's in a positive or a negative way?
Yes.
That would be positive
Yes.
or negative way. And as you heard it, I'm going to go ahead and do it while I have them here, my sincerely sincere moment. As we're talking and we're talking about credit, there are a lot of things that ring out at me too. All of us most of us have had some type of situation or issue that have impacted us in our life, that go on to impact us. As Mr. Marvin said, he had a divorce, and then he had something happen to his business. Those type of catastrophes happen, and then you just have no idea how to fix what has happened, how to turn around and rebuild. However, if you take the time to listen to those that have come before you that know, then perhaps you can learn a lesson from them so that you don't have to have that situation happen. As she said about the $2,000, would you agree that $2,000, if you prepare for it when catastrophe happens,
Right.
you have a little nest egg or a cushion there if you live underneath your means. A lot of us don't want to do that. I'm guilty of it myself. And then you look back and you're like, wow, you mean to tell me I could have saved this amount of money over this amount of years if I had just put this aside, instead of having to grind almost every day just to kind of keep up with the Joneses, as we say.
Right.
So take their class or go to their website. If you can't get in touch with Mr. or Mrs. Smith, there's always someone out there to help you get your credit straight.
Yes.
So these segments are going to take place with us, and we hope to actually help you emerge beyond your financial issues right here on Emerge and Beyond. I am your hostess here. I want to thank my guests, Ms. Gloria Smith, Mr. Marvin Smith at DKR Financial Group, and we will see you next time on Emerge and Beyond.
What if I told you that your story could change someone's life? Would you share it? Emerging Beyond.